Hey everybody, it's Mark Gochner with Dimensional Fund Advisors, and we are in sunny Las Vegas for the Exchange ETF conference. We have a special guest joining the Informed Investor. We are going to dive into all things ETFs. Hey, welcome everybody to the Informed Investor. I'm Mark Gochner, and today we are coming to you from sunny Las Vegas, where we are in town for an ETF industry event called Exchange. And we're very fortunate to have, I guess, a very important part of that event join us here today for the Informed Investor, Todd Rosenbluth, Head of Research for Vetify. Awesome to have you here today.
Thanks for being here. Thanks for having me on the pod.
Now listen, Vetify, I mean, it's your event. You guys are the primary sponsor, the host of this. So maybe just a little bit of background of what you guys are looking to accomplish.
Yeah, so our goal is to bring advisors together to learn within the industry, to have the industry come and learn from each other, best practices. The conference is 3 days, a combination of how an advisor can be better for their clients, how they can learn some tools, and then talking about various trends in the ETF industry. So we had sessions tied to active ETFs, we had sessions tied to regulatory environment. It's been so far a great conference, and I'm so glad you're here with us.
It has been great, yeah. You are all over it too, so thanks for finding time to squeeze away and join us here on the show. All right, Head of Research, I imagine you eat, breathe, sleep ETFs all day long.
I do. I've been connected to the ETF industry since 2000, more closely connected since 2010, starting to do research on them. And then we at Vetify run a couple of websites that have ETF in the name, ETF Trends and ETF Database, where we're talking with advisors, educating them about ETFs. And the fact that we've got more than 5,000 products now just makes it all the more exciting.
And you do quite a bit of media work as well, in addition to all those other responsibilities.
I do. So we publish content on our website for advisors to be able to read and for people within the industry. But there's opportunities to talk to the press as a third-party partner, being on podcasts like this, going on TV. It's great. The more that we can educate investors about ETFs, the better informed they are, which is, of course, the show is. So we're in the same camp as you guys.
All right, I'm going to put you on the spot. You ready for the hot seat?
Sure.
I love trivia.
Okay.
So I'm going to ask you a question here. All right, you ready?
Yeah.
When was the first ETF launched in the world?
So the first one was launched in Toronto. It was launched, I believe, in 1990.
Oh, spot on.
Was the year. So exciting that we are owned, my company is owned by the same company, TMX, which does the Toronto Stock Exchange. So they continually remind me that is actually the home of ETFs. But we got 5,000 children here. So I think both markets are doing well.
And you love them all.
We do. But it's great. And obviously, the industry has evolved quite a bit globally since then. And it's exciting to be a part of it.
Well, and I think that first ETF tracked the 35 largest stocks on the Toronto Stock Exchange.
Yes, it did. And then look how far we've come from just index-based products tied to a simple strategy to actively managed products and so much more.
Well, let's dive into that. So then the first one here in the U.S. was SPY, right?
Was SPY.
1993?
Correct. So that was, again, relatively simple in tracking the S&P 500, although it took some time to gain its sea legs.
So 30 plus years later, we're pushing on about 5,000 ETFs here in the U.S.
Yeah.
Right. So phenomenal growth. You've been a big part of that, with your career. What's your reaction when you go from 1 to almost 5,000?
Well, I love it because to me, it's the Job Security Act of 2026 or whatever year it is. Each time we see hundreds upon hundreds, even thousands of products that come to market, there's a lot. And I often get asked, are there too many ETFs? And the answer is yes. Are there too many mutual funds? Yes. Are there too many flavors of ice cream? Probably yes also, but who's turning them down? Listen, people have to make informed decisions. Our job, and I think perhaps you, is make sure that people are smarter about the decisions they're making.
So I'm going to follow up on that in a minute, but let's go back to then the ETF Act, 2019.
Yeah.
That really opened the door, I think, for a lot of these actively managed ETFs, right, where the SEC made it easier to go out there and launch some of these for asset managers. We saw a big increase then in actively managed ETFs. In fact, I think if you look at last year, like 1,100 or so ETFs were launched in 2025.
And many of them were actively managed
Yep.
products, which is exciting. We've got firms that have a long presence within the mutual fund world that entered into the ETF marketplace a couple of years ago for some as recently as the end of last year. They continue to build out their product lineup. We have firms that didn't have a mutual fund presence but had active capabilities in other forms entering into the marketplace. I'm a believer that more products is a good thing as long as there's a use case for them.
Well, Dimensional is a great example of that,
Yeah.
right? We were mutual funds, and then in 2019 with the ETF Act, we were able to launch now 41 ETFs and I guess around 260 billion, depending on the day. Okay, let's talk about ETFs in terms of some of the questions you get. Like, is there a common, I'll say, misunderstanding that people typically have around ETFs?
So I think people either, if they're familiar with ETFs, they think that they're tracking an index and they think they're tracking some of the ones that we talked about, the S&P 500 or the Russell indices for smaller large caps or the NASDAQ 100. And then we've evolved as an industry, thanks to asset managers as well, actively managed ETFs, but also just things that are slightly more complicated. And so when you're tracking an index that everybody knows, and we mentioned SPY, there's 4 actual ETFs that track the S&P 500. Nothing really is that different between them other than the expense ratio and liquidity. But with active ETFs or other index-based products, the devil's in the details. You have to look under the hood, so to speak, to understand what you're getting. You guys, with your products, your active ETFs are different than some other people's active ETFs. And so that matters. And so I think people often pick the simple button and just go, I'll pick the cheapest ETF around.
Right.
Cheaper isn't always better. Cheaper is good. Let's pay as little money as possible, but let's make sure that what you're getting is what you think you're getting.
Yeah, expense ratio is important, but it can't be the only thing, right?
Yeah.
People are using in their decision. But I go back, if we've talked to over the years, I'll say institutions, our financial advisory clients, and said, when you think about an ETF, what jumps out? And it's usually 3 things I almost always hear.
Yeah.
One is low cost.
Yeah.
One is the tax efficiency, of course, associated with ETFs. And then the third is usually intraday, the ability to trade throughout the day. And I think over the years, obviously that's been associated with, index tracking ETFs for many, many years. I feel like the ETFs have had, I'll call it a kind of a pristine reputation for decades.
Yeah.
Because of that, you alluded to now the entrance of a lot of, I'll say, more complicated type strategies, thematic funds, particularly in the last couple of years have been coming out, thematic ETFs.
Yeah.
What advice do you have for investors when you think about whether cover calls or leverage or inverse or, some of these different things, they can get very complex. What advice would you have for an investor? And how do you get your arms around some of these newer, more complex solutions?
So there's a range of them. So to me, there's products that use options either to offer higher income or downside protection. And they're a little more complicated and they warrant just going a little bit deeper than just seeing the name, the ticker, the expense ratio, but understanding the use case. And then you've got things that are even more risky or more complicated, that involve leverage, that are even single stock ETFs. So you're getting downside where you're betting against the security or you're doing 2 times leverage. Complicated doesn't mean it's bad, but complicated certainly means you need to make sure that you understand the risks that you're taking more than you understand the potential reward that's underway. So far we have not seen anything there are products that could hurt investors, but we haven't seen things go so badly that's tarnished the reputation of a firm or tarnished the reputation of the industry, and that's a good thing right now. Oh, we got a plane flying overhead. We have a plane flying overhead. Hopefully the audience can hear that too as I go louder. I'm a New Yorker that used to go to Met games, and the Shea Stadium used to be where the Mets play. They now play in Citi Field, and I don't know if I don't think you're from New York. Keith Hernandez is my favorite player growing up, and he would step out of the box every time a plane was flying by. He didn't want the distraction. This is my way of stepping out of the box till that plane flew by for it. So there are riskier products. It concerns me that investors might do harm to their portfolio or advisors might do harm to portfolios with those. But we have to hope that we're continuing to educate them that they're making informed decisions.
That's a big part of what you guys are doing. And
yeah.
I have to go back to the plane that was flying over. I was thinking, I wonder how many of those people on the plane lost money
Yeah.
versus made money
Yeah.
on their trip here in
Right,
Vegas.
because we're here where risk taking is often happening. Yeah.
Or expensive entertainment.
Yes, that's true.
Yeah. All right, let's go back to the industry then. You said maybe there's reputational risk perhaps for, depending on the firm, what happens with some of these ETFs. What about the industry? Going back to this idea of, hey, ETFs were always pretty pristine. Do you think there's, I guess, potential concerns or a little more of a black eye on the industry when you think about some of these might have higher expense ratios or the leverage? People may not necessarily understand what they're getting into on that.
So I'm not as concerned about that, because I do think that investors, even though the products are all using ETF at the end of it, I think that the first half or first part of the name of an ETF matters. So we might see people shy away from leverage ETFs or options-based products if there's negative experiences. But I think they might be more closely going back to the initial roots. So the simpler products, the ones that even if they're actively managed based on security selection. So I'm less concerned that the industry is at risk because we've got cousins, or asset managers have cousins that are doing something different. That it's usually not being equated the same way, I think.
All right, I'm going to go with your cousin's comment, but I'm
Yeah.
going to make it more identical twins.
Okay.
So, for example, let's get into something really exciting, I think, going on in the industry, which is the share class.
Yeah.
That's coming up here. The SEC has given approval for, I think, quite a few asset managers now to go out there and do ETF funds.
Your
ETF share
firm
class.
being helping lead the charge to get those approved?
Yeah, it was something, I think, absolutely the right thing to do for shareholders. We filed for exemptive relief because prior to that, I think just Vanguard was the only one that was allowed to do those share class, ETF share class off the mutual fund. So we filed for that. I think 80 plus or more managers also filed using similar language, and we got it from the SEC last November and a bunch of other managers.
Yeah.
So it's great news for the ETF industry. I just love your perspective on that.
So I think it's great for the industry. We've seen one firm come to market with an ETF to mutual fund share class. We're waiting for more others to come. I think a lot of the plumbing still needs to get worked out, is my understanding, and that's okay. This should be a marathon, not a sprint that's happening. But giving investors choice and being able to leverage the scale of portfolios is a good thing. So I think over the next 5 years, the supply is going to increase significantly. I think that the demand will soon follow, but it was never, in my opinion, we would see firms get approval and then the floodgates of products would come to market. And so we haven't seen that, and clock is continuing to tick, but it's not a race.
Well, it'll take some time, as you said, but the benefits, you mentioned economies of scale, so you can start an ETF now and have a massive asset base to build off of. I think from our perspective, a dimensional. You said choice, which is incredibly important for that. We think about, too, the ability to rebalance pretty cost effectively now between the two, and of course, the tax efficiency you can bring there with the mutual funds as well. So a lot of benefits there from our perspective around those share classes. So we'll see the plumbing. I know the custodians, the platforms are working hard to make it very automated. Hopefully, maybe later this year, maybe early 27 or 2027.
Oh, really? Okay.
We'll see on that one. So crossing our fingers. On that one. But great news to come for sure.
Yeah, no, it's exciting. Listen, we're going to be here for the ETF industry to support education for years to come. The product development's going to happen as well, and we'll go from 5,000 to more in the future.
Go back to the ETFs. They've always had this ability to create redeem baskets, flush out the unrealized gains out of there, be very efficient from a capital gains perspective. What was the IRS thinking on that one? Do you have any background on how that kind of got through and the IRS never caught up to that, or did it get too big too quick?
I don't know how we started there, but I do think that it's going to be hard to make changes. It's been floated from time to time that maybe that should change, and I actually think what would be more likely and or would be better is let's just make this better for mutual fund investors. Let the create redemption process, which could happen. I don't think anything is precluding it from happening, other than it's just not happening. And so I think rather than close what some people think is a loophole, it's just this is what investors are expecting with ETFs. Why would we punish them why not just make this be better for investors overall? Money is clearly going from mutual funds to ETFs ETFs are becoming more and more the vehicle of choice for investors. Not necessarily money is all moving from one product to another, but net new money is increasingly going into ETFs. I think we should make it better for all investors as opposed to penalizing the ones
Yeah.
that are choosing something.
Well, and the share classes should help that too, right? From a tax
Yes.
efficiency perspective, certainly, with the mutual funds and the ETFs.
Right.
And we've been actually, we've employed that in-kind exchange in our mutual funds about the last 3 years at Dimensional.
Yeah.
So figured that out from a process perspective. So it's been well received.
Oh, good.
Certainly by clients on that perspective. Okay, let's talk about outside the U.S.
Yeah.
So it's neat to see some of the ETFs get a ton of energy. You guys have been working hard on that as well. So walk us through what you've been doing there.
Outside the United States.
Outside the US.
So for perspective, Vetify which is owned by TMX, which is a Canadian company. We have a presence in Europe in a couple of different ways. So the ETF Stream website, which is an educational website similar in style to ETF Trends or ETF Database. In the US, ETF Stream is now our sister publication. It's been around for years. It became part of the Vetify family within the last year. And ETFs are rapidly growing within Europe. It's very exciting to be able to see that. I love that we as a company are able to support the education, keeping up with the different trends in the news. And what's exciting also is we're seeing a lot of firms that have a U.S. presence are bringing their strategies into Europe and having success. And actively managed ETFs is a smaller part of the European marketplace, but the number of products has continued to grow. The education has continued to grow. So we're really excited about that.
Yeah, we've been seeing the same kind of thing. Some countries there is a tax benefit for
Yeah.
ETFs. Some countries there aren't.
Right.
But you're still seeing a preference for that. And we always talk at Dimensional about the idea of the wrapper. Some people prefer a mutual fund or maybe trust outside the U.S. Some
Right.
people prefer ETFs. But the question there is always you want to make sure that the engine's very similar between the two. Don't let the wrapper wag the investment decision on that kind of stuff.
You've got to make sure that the strategy fits in with what it is you want to do. And it's not where you were going necessarily, but I get asked, do I think mutual funds are no longer going to survive? People own mutual funds. They've owned them for years. I own them in 401k plans. I'm not selling them because I've been part of the ETF industry. It's not worth the tax implication. It's got to be for the right reasons.
Yeah. What's your thoughts on ETFs in a 401k space?
I would love to see it become more readily available.
Do you have any conversations where you're like, hey, maybe there's a time frame there where it might happen?
I've been hoping it's happening soon for 15 plus years. I don't know that I fully. So some of the benefits of an ETF obviously don't work the same way, aren't as important in a 401k plan the way that they would be outside of a 401k plan. The tradability of an ETF is less useful. If you're holding it for, I've got many years, hopefully, before I'm retiring, or maybe not. I guess wouldn't that be nice? Anybody that's listening that wants to help me retire is welcome to be able to do so. But I'm not selling out of my of anything so fast, so it doesn't work the same way. But I think it'd be great to have more choices. I think that's one of the reasons we've seen ETF to mutual fund share classes is to get some of these products available within a 401k plan, but ETFs would be the easier route. I would hope we'd have it become more readily available, but I don't think it's happening so fast. Do you?
No, not on that part.
Yeah.
Getting into the 401k plans. Yeah, I think it probably goes back to the plumbing a lot. We talked about earlier. A lot has to be done there to make that smooth. We talked about the share classes. Anything else you see coming down the horizon you're pumped for the ETF space?
We're approaching, I think, $400 billion of net inflows, and we're in the middle of
year to date. Right?
Year to date in the middle of March. So we had a record in 24 inflows. We had a record in 25 inflows. We're on pace to have another record again in 2026. It's a great time to be part of the ETF industry.
Yeah. All right, last question for you.
Yeah.
How many symbols do you know? Tickers.
So I don't know that I could count them going through it, but I like playing the game of, what's interesting to me?
Could you match 100, 200?
Oh, I could easily do. We're not going to sit here and make me do
No.
100 or 200
I'll make you.
on it to be able to prove it. I could easily name over 200 ETFs. What's interesting to me is when I'm looking through the flows leaderboard on a month or a week basis, and I see a ticker and I don't know what fund that is. That surprises me. Which is, again, a good problem. Obviously, some of that comes from scale, like the largest products are going to be able to have that. But every once in a while, it'll be, oh, I forgot about that one. This 5,000 is no way to be able to keep up with 5,000, but yeah, I feel
You do pretty well with
I
it.
feel pretty good that I could get up. I'm looking around at the crowd here. I would probably do. Since we're in Vegas, I would do a friendly wager to see if who could name more. That'd be fun.
I love it.
For donation, we're doing donations to World Central Kitchen. If somebody wants to do that, I'll happily do a donation with them.
All right. Well, maybe after cocktail hour,
There we go.
we'll have some brave people and challenge you.
There we go. On it.
So Todd, thanks again for all the help. We really appreciate it. Your time today, it was excellent as always. And thanks to all of you. Thank you for attending the Informed Investor today, and have a fantastic rest of the day.